Okay, good morning and good afternoon, everyone. Thank you so much for joining us today. My name is Stuart Keane. I am the Community Manager at FinTech Australia and the Global Engagement Manager at Austrade. We're really excited to be joined by an awesome panel today. And what we're going to do before we kick off, just to get a gauge of what our audience is interested in, I'm going to run a little poll. So appreciate your responses here, and then we'll get into the bulk of the webinar. So you should be able to see our questions popping up there. First one, she can respond to: where are you tuning in from today? Is it Australia, the US, or somewhere else around the world? I can see the responses coming in, which is great. Second question we have there today: is your business active in the US? Yes, no, or you will be soon. And if you will be soon, maybe you are looking for some support from Austrade or FinTech Australia. Our final question there today: which area of FinTech is of most interest to you? And I probably couldn't fit all of our subsectors in here, but there's payments, lending, blockchain and crypto, insurtech, regtech, and other. I'll give you 10 more seconds to submit those responses. A few more responses still coming in. Great. And here are the results for everyone. So we can see that 83% of our audience is tuning in from Australia. 67% of businesses or people tuning in, their business is not yet active in the US. We also have 17% who are active in the US. And the sector of most interest is the payment space, also blockchain and crypto, and other as well. So there's probably some more sectors we could speak about as well. Thanks so much for the responses there. Now let's get going. Okay, I'd love to hand over to Steve Rank, Trade and Investment Commissioner based in Austrade at New York. Thanks very much, Steve.
Thank you, Stuart, and welcome everybody to today's panel discussion. As Stuart mentioned, my name's Steve Rank. I'm the Australian Government's Trade and Investment Commissioner based here in New York, and I'm also the practice lead for our FinTech practice in the Americas. For those who may not be familiar with Austrade, we are the federal government's trade, promotion and investment attraction agency. And we're here to help support you on your journey into the US market. We have a strong presence in the United States with posts in San Francisco, Houston, Chicago, Washington, DC, and New York, where I am right now. But why the United States? It's an extremely important market for Australia. It's our largest source of foreign direct investment, and it's a key growth market for Australian companies when expanding internationally. It's also the largest fintech in the world, with a fintech market in the world, with over 70% of global fintech investment originating here last year alone. Given this, I'm really excited for today's discussion with this amazing panel who are going to share their insights and experience in the US market with you over the next hour. Now, if I could briefly introduce our panelists, you would have seen their extensive CVs in the invitations. I'm just going to give a real thumbnail sketch of each of them, but they are an amazing panel. Firstly, Simone Joyce. She is the CEO of Paperplane, a payment technology company she co-founded in 2017. Paperplane is the bank-grade platform where traditional scheduled payments and digital data-rich and real-time payments work together. To say Simone's a busy person is probably understating it. She's chair of FinTech Australia since 2020, and she's actively involved with various committees in shaping the FinTech market in Australia, on the such as the FPOS FinTech Advisory Committee, the ASIC Digital Advisory Committee, as well as other regulatory committees. So she's actively involved in shaping that. So please welcome Simone Joyce. Secondly, if I can introduce Trina Blair. She's a highly accomplished global businesswoman with extensive experience in Australia and the United States over her 20-year international corporate career. In 2014, she founded FD Global Connections, and she's also CEO of this boutique Sydney-based advisory consultancy. And she's engaged by Australian businesses to help them scale into the United States market. She's really passionate about this, and I guess through her skill and experience, FD sort of certainly help and assist companies take out some of the risk of expanding into a complex market like the United States. Now, when we're talking complexity, the legal environment in the United States makes Australia look quite simple, really. Jerry McLaughlin is a partner at K&L Gates in San Francisco, and he's a member of their Payments, Bank Regulatory and Consumer Financial Services Group. He focuses on regulatory compliance and enforcement for fintechs, digital asset crypto companies, and other consumer financial products and services. He helps with compliance and the various legal issues that companies will face when coming to the complex US market. And our final speaker is Zahir Khoja. Zahir is the general manager for Afterpay North America, which is the leading retail installment payments innovator and one of the fastest growing global fintech companies in the world, which many of you already know that name very well. He's responsible for the North American business, including sales, client relationships, business growth and partnerships, as the company continues its rapid market expansion. Prior to joining Afterpay, Zahir's held senior management roles in a number of companies, including as Executive Vice President for Global Merchant Solutions and Partnerships at MasterCard. And he's also has been earned global recognition for his contribution to driving financial inclusion in Afghanistan. So a really accomplished person across many, many markets, and glad that Zahir can join us along with Simone, Trina, and Jeremy. So that's the introduction of our panelists. Why don't we kick it off with some questions? So as Stuart mentioned, we're going to go through a series of questions with our panelists, and I think there's opportunities for you to ask some questions towards the end of the session. But to kick it off, Zahir, if I can turn to you, the United States is a leading and developing fintech centre. Would you be able to provide some insights on Afterpay's ongoing strategy in the market, in the US market?
Yeah, Steve, thank you very much for having me here today, and it's a pleasure to meet all of you. As you know, the US is growing fast with fintech, and I would say our strategy has been and continues to be very simple. It's around 4 key pillars, if I may say. For everybody in Australia, you already know what Afterpay is, and our strategy has been to focus on the customer experience for the next generation consumer, the Gen Z and the millennials. And we've kept that here in the US as well. The second pillar to the strategy and the success in the US has been around talent. And it's really about creating that experience so that you can hire the best talent to bring the product to life. And people want to be part of the success when that happens. The third thing is about focus. And early next generation Afterpay customers chose us because we did one thing and we did it well. And that was 4 payments over time, always interest-free. And again, when we came into the US, we were very focused and we stuck to what we did well and brought in Australia to bring here. We then applied the same philosophy here and while continuing to innovate, but staying true to our company and the beliefs, which is absolutely critical. The fourth pillar is really about simplicity. And for us, that's been built on having a simple and easy to understand value proposition for both our retail consumers and our merchants.
Great, thanks, Zahir. That's excellent. Trina, can I turn over to you now? How does FD Global Connection support Australian businesses with their market entry into the United States?
Thanks, Steve, and thanks also Stuart and the team at FinTech Australia for the invitation on being on this really important webinar. So, Steve, as you mentioned, I started FD Global in 2014, having lived and worked in New York. Since then, we've been engaged by Austrade universities to create unique programs. So, for example, we were involved with Austrade in developing and implementing their landing pad program in San Francisco. And we've also spent a lot of time working with fintechs to prepare them for their launch. So what does preparation look like? We assess their gaps in the business. We develop strategies to address those gaps. We identify the most appropriate market entry and the distribution strategy. And once we've completed this, what's been really important for the fintechs is Because of our deep and broad network right across the US, we then connect those fintechs, the founders, into those networks. And that's for prospects, partners, and professional service organizations who we've worked with for the last number of years.
Great, thank you, Trina. Simone, if I can turn to you now, as CEO of an Australian company that has entered and is entering the US market, how has the US fintech ecosystem impacted on your organisation, and what has been your general experience in the market?
That's a very big question, Steve, and I'll try to answer it as succinctly as I can. So, look, we made some mistakes when we first looked at the US market. We assumed because of the appetite and the innate understanding of our product here, we would have the same immediate resonance with the US market. Now, when we first started in Australia, we were talking directly to businesses and then their payers. So we've got a dual-sided platform, similar in ways to Afterpay, different purpose. When we went to the US, we assumed that we would be able to have those same sort of conversations, allowing us to learn about the ecosystem before flipping up to white labeling to banks and financial institutions in that market. What we actually learned was it's very different. And we learned that at a time that we have a partnership agreement with Square, and we were leveraging that to as our warm introduction directly into businesses in the US market. But we realized our brand didn't resonate. The way that we spoke about something does not resonate. Even our name, Paper Plane, was more associated with payroll services and not ongoing payment relationships. So we've had to wind back a little bit, and just listening to Trina talk, I was like, oh, why don't I talk to Trina about this? But what we have done is engage with an agency, a branding agency actually, with an office where I am here in Brisbane, and also an office in San Fran. And so they're helping us bridge that cultural gap. And we have a completely different brand, which will be launched in March next year for the US market. Spoiler, it's called Billy Cart. We learned that you cannot make assumptions, that a little bit of R&D, even in a soft launch way, is really valuable, but you can't be afraid of really having a good look at what's not working and taking drastic steps to address it.
Thanks so much. Can I ask a follow-up question? How quickly did you come to that realisation that the brand and those issues that you needed to really address quite quickly?
Well, the proper answer to that question is not quickly enough, because we were a little bit too heuristic to start with. But I think it took us probably a good 6 months to realise that something wasn't quite sticking, and for us to peel back and actually figure out what it was. So look, 6 months of learning internally. What we learned was actually to change our mindset, and that's invaluable. I would have liked it to be a shorter learning curve, and hopefully now the repetitive learning curve that we will have will be shorter. But for us, this next 12 months is a really important time for us to learn deeply how we can solve problems for businesses before we address the banks and financial institutions in the US market.
And presumably, if you don't engage with the market, you can't find that out. So it's that engagement with the market that allows
Absolutely, yes. It's that beautiful flywheel of benefit. That's right.
Yeah, absolutely. Great. Fantastic, Simone. Thank you. Jeremy, can I turn to you? We were going to ask you questions. Can you share with us a brief overview of the US regulatory environment for fintech companies? I'm sure that's absolutely not possible to do a brief overview, but could you do your best, please?
Yeah, I will do my best. I apologize that my lack of the legal structure in Australia. I wish I could make comparisons, but I didn't study up on Australian law before this. But the main thing to keep in mind if you're entering the US is that the regulation here, primarily occurs at two levels, both federal and state. And it's especially true for fintechs because state laws actually play a very significant role and can be quite a barrier to entry. A lot of it depends on your products and services. At the federal level, for fintechs, the primary regulatory consideration is FinCEN, which I think it's essentially our equivalent to, I think it's called OSTRAC. It's in charge of combating money laundering and safeguarding the financial system. And various sorts of entities are required to register with FinCEN, which is a relatively easy process. And for a fintech, the question is really whether you qualify as a money services business. Other federal regulators may be important depending on your particular product. You know, the Securities and Exchange Commission would be relevant for broker dealers, investment advisors. The largest consumer protector at the federal level is the CFPB. And so, you know, relevant for fintechs, actually, they've had a particular interest recently in companies offering buy now, pay later products. At the state level, which is where I spend a lot of my time helping fintechs, licensing laws are the primary obstacle that fintechs face. They can be very daunting. You know, and again, it depends on the area you're in, right? But I saw most of our participants are in the payment space. So that's where I spend most of my time is state money transmitter licensing laws. So something that, you know, if you're outside of the US, a lot of people don't really understand is that of the 50 states, 49 states have a money transmitter licensing law. And in order to operate in each state, to, you know, if you're serving a customer in Massachusetts, that's a bad example. They have a weird law. If you're serving a customer in Vermont, you have to have a license in Vermont, but that does not allow you to serve a customer that lives next door in New Hampshire. You would need a separate license to serve that customer in New Hampshire. And these can be very daunting because each of the 49 different states, their laws are worded differently. Their definitions, you know, it essentially requires a license for receiving money for transmission. So the definition and your product is very important of what do they consider receiving money, and what is money if you're in the crypto space. And these can be cost prohibitive. You know, there are some require companies to have up to $100 million of net worth and post a bond and undergo background checks. And this can be, you know, at the 50 state level. It's a similar kind of question if you're in the lending space. Most of the states have licensing laws. I won't go into as much detail there, but there are same considerations, you know, whether you can design a product to get around those licensing laws. And then the last thing I think I'll mention is at both the federal and state level, there are consumer protection laws that you have to be aware of. And these are really protecting against kind of unfair and abusive acts and practices. So this is where it's important to make sure your user agreements, your terms of service, your website terms, and all of that are very clear.
Great, thanks, Jeremy. In Australia, we do have the federal type system as well with federal and states, but we have fewer states and a lot more regulation tied in at the federal level, which makes it a little bit simpler. But yeah, it's certainly a complex environment. Just if I can ask a follow-up question, what can companies do ahead of entering the United States to ensure their business is compliant with local regulations? So what can they do to prepare to start to help them get ready to come into the US market and probably help you as a service provider?
Yeah, I think it's really important to kind of be very aware of the legal considerations when you're designing your product, when you're structuring your product, and even presenting your product, how you're marketing that product to make sure there aren't unfair and deceptive claims. You know, but for instance, as I said, I help a lot of fintechs in the payment space, and so before you launch here, it's important to make sure that you're structuring the funds flow, for instance, of the service you're offering correctly, so that you never touch or hold the customer funds. Or if you kind of can't structure around that, you know, for instance, you do need to touch or hold the customer funds, then before you launch here, it's important to make sure that you've set your product up in a way that there are various models you could take advantage of. You partner with a bank, or you partner with a licensed entity, or some other entity that's exempt. And those sorts of models have downfalls. You know, you're giving up some of your product, but it at least allows kind of you to get your foot in the door for you to launch here, and not be caught by a regulator after because you required a license and you didn't have it in advance. One other piece of advice I would say is that if before you're launching here, if you kind of don't want to do the partnership model and you don't have the resources to get 49 different licenses. I've seen some fintechs kind of target the specific states where they think they'll have a lot of their clients, where their customers would be, or where their product may fall into a certain exemption. For instance, if you're in the crypto space, only about 50% of the states regulate crypto. So, pre-launch, you could make sure that you're blocking customers from certain states and kind of do a preliminary launch in the US in states where the risk is less. So those are a few kind of pre-launch suggestions.
Yeah, it's sort of quite a wide reach when you're talking about the customers and being in multiple states. So the need to block is presumably pretty important, I think, from what you're saying.
Yeah, it very much can be. If you are like most fintechs that I work with and don't have the resources for 50 state licenses immediately, or if you are dealing with crypto and you don't want to deal with a New York bit license, which most people don't, then the ability to block New York customers, for instance, is how a lot of companies get around that.
Yeah. Great, thanks, Jeremy. Simone, if I can turn back to you. What were your drivers and milestones for setting up in the United States, and how are you going to be acquiring new customers?
Yeah. Okay. So our drivers were really looking at macro banking trends, which sounds really dry. I think it's fascinating, but ultimately we had taken a view from day one that we needed to make sure that we were agile enough to move into global markets without the burden. Jeremy mentioned, make sure you don't touch customer funds. We actually don't do any payments. We're an overlay service. So we made some strategic decisions early on to help us be more mobile globally. And then we started having a look at what markets were really attractive. Initially, we were looking at the UK, but if you think about where they are on their fintech ecosystem journey, they've come through the challenger banks at the consumer level, and they've gone up through into SME banks challenging now, which is driving incumbent behaviour to have better products and services. We've also got open data or open banking and fast payments in the UK. In Australia, we're following that same pattern, and we're really happy to be at the beginning of that because that leverages how we position ourselves to banks. Same thing's happening in the US, although there are some differences. We've had a market-driven approach to open data and open banking. We've got fast payments via FedNow scheduled to start in 2024, and we're starting to see some more challenges coming in and really driving behaviour. So Chime, even though we can't call them a bank anymore, Revolut's there. We're seeing more mobility in how people are managing their finances. Cash App with Square's a great example of that. And that's starting to then push in towards how a bank's thinking about the services they provide business customers. That's an ideal environment for us. Coupled with that, it's a large market. Fragmentation isn't a bad thing for us. It means that we can create multiple partnerships and not have crossover or stepping on anyone's toes. So that's a really good market. The way we're approaching that is through a partnership-driven model. So Square's a really important partner for us in that market because it allows us to address the merchants and provide services to the payers as well. And that's really critical for us. That's super critical because we're not there. We're not actually physically in the States. So having a partner with a trusted brand, at least for the beginning, will allow us to create that adoption cycle that we need to really deeply understand the market. There was another part to your question, and I've talked myself in circles. It was... how are we going to address the market?
I alluded to a little bit, but how are you going to be acquiring new customers and obviously that part model and the fragmentation?
Yeah, and one of the things that we're really laser focused on for the US market is making sure that people can self-serve in 99% of scenarios across the platform. So there shouldn't be anyone physically holding a customer's hand to onboard. There shouldn't be anyone having to show you how to use the product. And we should be able to wake up in the morning and have had, 100, 200 new businesses adopt and start using the platform immediately. So it's actually helping us refine how we relate to our customers. So it's still that very human and caring approach, but we're not there, so it just needs to make us feel like we are there. Eventually, we will have to have a boots on the ground scenario and have an office, but we're pushing that down the line for as long as we can. We know that when we end up with, going through procurement cycles and so on and so forth with banks, it's really helpful to have someone there to manage that process, and we will need the US entity in order to sign those contracts. So that's stage 2 for us. Stage 1 is where we are now.
Great, thank you, Simone. If I can turn to Trina, what factors do you think are most important in new market entry, and what does FD Global look for in business for a business to be successful in that new market entry?
Well, they're two very big questions. We could spend a whole day on those, but let me try to be succinct. In fact, I'm going to answer part two first of the questions. So, what do I look for in a business to be successful in a new market? The most obvious is validation in the Australian market. So, you've been successful here, you've got marquee clients. Let's not forget, Australia is a great test market, particularly in fintech and financial services. It's a relatively small market compared to the US, and it can be challenging to be successful here. But if you are successful, you've got that validation, and that makes your leap into the US a lot easier. So that's number one. Obviously, an understanding and respect for the regulation and governance environment. And as Jeremy said, it's incredibly complex in the US. So what I look for is a single line of responsibility for regulatory adherence and oversight, which is really critical. The other thing I'll say is I look carefully for what I call stars in the eyes syndrome. It's exciting to launch globally. There's absolutely no better feeling than announcing that you're about to launch internationally, particularly into the US. But what that brings is danger, because I've sometimes found, even though there is all the excitement, founders aren't really prepared to reflect on where the challenges are in their business. It's all about launching. They're not really taking that step back to say, hey, why are we doing this again? Let's remind ourselves, and what are the real challenges in the business? So if I think about part two of the question, what factors do I think are the most important in market entry? One of the big mistakes that fintechs make, and in fact any business makes, is simply to pick up your fintech, think that it will be the same model, the same customers, the same strategy, and drop it into the US. What you have to remember is when you launch globally and into the US, you're a startup again. So you have to go back to that mindset of being a startup. What was that when you were in Australia when you first started? Because yes, you've got the validation in Australia, which is absolutely fundamental, but you're going into a new country that nobody knows you. And so you have to think like a startup again. But I also want to finish on something that I've given a lot of thought to as I've worked with fintechs over the last 8 years. And certainly this has been my own experience when I lived and worked over there in launching product. In fact, I'm writing a book about this at the moment, so you're actually getting the first opportunity to hear this. What I want those on the webinar to think about is, what are the top 5 processes in your fintech that you must scale successfully? What are the top 5 processes? Now put aside financials and put aside your culture, because they're a done thing. You must be measuring those. But consider, what are the top 5 processes? You need to assign ownership. You need to document them, which I know is tough and boring and laborious, but there are people that enjoy doing that. You need to apply metrics to those, and you need to manage those. So what I want the listeners to think about is the top 5 processes. You don't have the budget probably or the time to document every process and apply metrics to every process in your business. But what are the top 5 that you are going to have to scale and do that successfully? And if they're not scalable, that your business will not be successful. The old adage, if you can't measure it, you can't manage it, is very true, and it often brings scale-ups undone.
Thanks, Trina. Yeah, some good advice there. Just a follow-up question on the validation piece. So, as you say, Australia's a great test market, and validation is really critical. But you're validating with brands that aren't known in the US. How are you helping companies sort of deal with that issue? The big 4 banks, for instance, are well known in Australia and they are large in global terms, but they're not necessarily household names here in the US.
Well, actually, I'm going to disagree, Steve. We do have Westpac, Commonwealth Bank, NAB, Macquarie Bank, all in New York. So they are brands that are known. And so if you do have one of the top 4 banks in Australia, the big 4 banks in Australia as a customer, that actually goes down very well in my experience. They are relatively known. But nevertheless, even if you don't have one of those top 4 banks, it's about knowing the market. It is about who the customer is and your messaging, your value proposition, your branding, as Simone mentioned. That is the way that you're going to understand and be able to articulate to your prospects about the success and the validation that you've had. So your market research, if you don't have a known brand, is critical to understanding and the messaging that you put around that.
Great, thank you. And you are spot on. They are all here in the US market and in New York. Very true. Zahir, if I could turn to you, there has been a lot of talk. We've spoken a bit about Square today already, but there's been a lot of discussion about the announcement of the merger between Afterpay and Square. What does that mean for Afterpay going forward?
Yeah, and I heard a lot on this webinar today about Square, so I guess it's timely that we have this conversation. So for those that don't know, we've entered into an agreement for Square, or I guess I should call it Block now, as the new name that was announced yesterday, to acquire Afterpay. And we're super excited about that. Both are, innovative founder-led organizations with highly complementary products and a uniquely aligned vision and values, and the cultures mesh very well. We truly believe that there's going to be a ton of fantastic opportunities when it comes to market segments, products, channels, geographies, and it will allow us to expand our offerings to the broader set of customers and merchants. One thing that I'm sure most on this webinar will find interesting is Australia's Square's second largest market behind the US. So we really see this as a fantastic opportunity to help as well. So lots more to come as the deal comes to fruition, but stay tuned and look out for it.
Great, thank you. It's an exciting time ahead.
Yeah, very.
Trina, if I could turn back to you again, as a market advisor and a consultant for a broad range of tech scale-ups, what do you think is the most exciting? What do you think is most exciting about the fintech business in comparison to the other sectors that you work with?
Well, thanks, Steve. That's a very loaded question. And I'm glad I'm only talking to the fintech audience today. Look, I've worked in financial services in various forms, one way or another, since 2007 in various roles. And what I know about the industry, it's sophisticated. It's an efficient financial network with regulation and oversight in Australia that offers stability, and that is essential for a functioning society. Innovation and disruption has been a core feature of success. I recall when I worked at Westpac, transactional banking, I was involved in establishing that division for 10 years. We introduced BPay. We introduced internet banking when that came online. Now, without showing my age, these were exciting times, and I do feel that at the moment, fintech is another exciting time. What we saw back then was, and what remains true today, is Australians are fast adopters of digital banking. And this makes the industry really exciting. But I do want to finish on this because I think for this audience, there is one opportunity which I think will make a significant difference to billions of people around the world, which is untapped at the moment. Globally, there are nearly 2 billion people who are unable to get a bank account. In the US, that represents 14 million people. In Australia, that represents 3 million people. Now, there is some momentum in solving this. For example, the New York EDC recently announced, in fact, it was in July, a global competition for Fintechs to solve financial exclusion for their 1 million residents, only in New York State. And by the way, there weren't any Fintechs out of Australia that applied for that competition. So there is no other industry that I know that can have an unprecedented positive impact on financial inclusion. It's a significant global problem and represents an opportunity for a savvy founder who's truly committed to ESG principles.
Great, thank you. And this is completely unscripted, but Zahir, with your background on financial inclusion, you might sort of have a follow-up comment there.
Yeah, no, I think Trina, absolutely. I think it's definitely a challenge. It's been a challenge for a long time, and a lot of the work that I did in my past prior to Afterpay was around financial inclusion, right? Where you look at financial inclusion doesn't mean that you just have the ability to own a credit card or take out a loan. It actually has a sense of belonging, of community, of commitment, and you actually have a sense of you have something that's yours that you can gravitate to. And so I think the evolution of technology, of mobile phones, has allowed that to gain wider adoption, but I think there's still a long way to go. And to your point, there's a lot of runway for any fintech that wants to tackle financial inclusion. It is not necessarily the sexiest thing in the world, but it is the thing that makes the world a better place. And if we think about financial wellness and what we all strive to bring to the communities that we're in, solving that is a key point. So well said.
Right, thanks, Zahir. Simone, you covered off some of the challenges that you encountered that surprised you. What solutions and support have you found useful in dealing with those challenges that you faced?
So one of the things that we did this year was participate in a program with Austrade and Numa in New York. It was a virtual mission, essentially. And even though we weren't specifically joining that program to make connections into our phase 2, which is talking directly to banks and financial institutions, it actually helped us create quite a good nascent network through there, and helped us to understand some of the challenges facing that sector of the market. We have almost like a dual market fit that we have to achieve. And the first one is solving problems for small businesses and subsequently their payers. The second one is making sure that the financial institutions in that market actually understand the problems facing their customers, being the businesses. So for us, having that conversation and making those connections early really helped us to shape how we're thinking about our what we're calling our 12 months of R&D that we're heading into in March. So Austrade was quite instrumental in that process. Engaging a branding agency with a deep understanding of the US market was really helpful for us as well. And that was an investment, but it was one that I would choose to make again, because we got more than a pretty logo out of it. We actually really got a matrix of, what does everyone else look like in this market? What are they talking about? What are they doing? We can do that homework ourselves, but layering into that where that can possibly lead was really interesting. So yes, people that understand how to create a brand, that will be followed on with people who understand how to execute a go-to-market strategy in the US. Something that we've found, we're quite rubbish at here. We don't do SEO, we don't do social media, we don't do any of that stuff. We're really, really good at understanding payment infrastructures, but bringing in those required skills is probably more critical for the US than it was in Australia for us in the early days, because that will help us create that network of users with a much less organic approach than we were able to leverage here in the Australian market.
Great, thanks, Simone. And certainly a brand is much more than just a visual identity. So yeah, it's really important to have all the other elements of the brand values and how it all fits together, which is great. So looking forward to seeing your new brand when it comes out, when it's launched. Jeremy, if I can turn to you now, as a lawyer assisting clients with complex commercial arrangements and cross-border dispute resolution, what are some of the legal pitfalls that Australian fintech should look out for when entering the market?
Sure. I think many of them are kind of things I touched on earlier. Making sure you're designing your product in a way that lowers your regulatory footprint and make sure you're aware of all the potentially applicable laws that could apply to your product. Aside from kind of the regulation that I talked about earlier, I think an additional thing to think about is if you're working under one of those models I discussed, where you're partnering with someone else, a bank, a processor, or a licensed entity, so that you don't hold the funds, for instance. It's very important to make sure that your contractual provisions are very clear and that you can rely on them if you have a regulator come knocking at your door. I assist a lot of clients that they get an inquiry letter a regulator has just found their website and it looks like they're engaged in money transmission, but they know they don't have a license. Or they investigated a competitor and the competitor said, well, they're doing this and they don't have a license. So then the regulator comes and they want to take a look under the hood. And so it's very important that your contracts with your partners make it very clear what you are and aren't doing. And that's going to go a long way to help get the regulator to get off your back. Aside from the regulatory side, I think the only other thing I would mention is, it's important to remember that in the US, we really like to sue each other. It is extremely litigious and litigation can be very, very costly. I started out my career as a litigator, actually. I call myself a recovering litigator because it can take immense amounts of time, both time and resources. The most, I would say, the most expensive thing is discovery. You get sued and immediately the other side is entitled to request all of these documents and all this stuff from you, and you're going to fight that, and that can rack up legal bills immensely, and especially if it's brought as a class action, which is a huge thing in the U.S. There are plaintiffs' attorneys that make their career off of just bringing class actions based on one, kind of unclear term that were in your conditions. So making sure that you've kind of protected yourself and prepared to enter the US market, the risks, and lower your litigation risks. Some of that can be done with kind of making sure you've built in, either in your terms of service or your contracts with your partners, alternative dispute resolution mechanisms. So kind of limiting the procedures that could apply if a dispute arises, limiting what discovery the other side is entitled to. And there are some states that that can only go so far. For instance, like a class action waiver won't be enforceable in some states. But making sure you kind of protected in advance against future litigation risk is another big thing to think about when you enter the US.
Great, thank you very much, Jeremy. Not particularly uplifting, but important to have this sort of stuff sort of sorted out up front and in advance and understand your plumbing to make sure that you can avoid some of those regulatory pitfalls. So here, if I can turn to you, how has the pandemic impacted Afterpay, and what are some of the opportunities and challenges that you see in this post-COVID recovery we thought we're going through post-COVID recovery. The last week might have sort of changed that a little bit, but your insights would be appreciated.
Yeah, no, it's a good question, and I'm hopeful that the last week is the end of it, and we're on the good side of it now, but more to be seen there. Obviously, the acceleration in online spending has been a key thing that's happened over the pandemic, especially with people working from home and being from home. There's been a huge shift towards online spending. What we've always also seen over the last few months is that people want to get out. They want to go to the stores, they want to shop. And so that has also helped us to create an omni-channel experience for our customers so they can shop online and in store. The other thing we've seen is a tangible shift away from credit. And if you look at the global financial crisis of 2008, when one of our co-founders was growing up at the time during that and saw what was happening and said, I want to create a world in which people don't have to, where they can have the benefits of borrowing, but not have the downside of it. And so one of the things we're seeing now is that we're in a debit economy, and the credit card is being left behind. Almost 90% of Afterpay transactions today are made with debit cards globally. Almost 90% are made with debit cards globally. And that tells you something. Our customers want the benefit of paying over time, but they want to use their money to make that payment as opposed to have long-term perpetual debt. And so we're seeing that, and it's really enabling the vision that we set out to bring. The second thing is our customers love us because we don't trap them into any type of debt or upsell them with a loan. So it's not like they come into Afterpay and then we say, oh, and by the way, we have an APR solution. We basically allow them to use Afterpay for the pay in four, and we don't try to upsell them on anything. And Generation Z is leading the way And for them, money is cultural, right? So there, as I mentioned earlier, they have that strong preference to using their own money, but the benefits of paying on time. They have a strong preference for debit, and they are very much credit averse and debt averse, which leads really well into helping us grow the business and bring the innovative solutions to them in a way that works for their current lifestyle today. And I think one of the things as we continue to learn through the pandemic that is critical is leaning into the change and listening to the market. What is it that the market is doing? What is it that the market is wanting? And the post-COVID world is not going to be the pre-COVID world. We are moving into a new era where the consumers are digitized. They want to do things their way. They want to vote with their fingers, and they want to shop in a way that makes sense for them. And so I think, we're well poised for that, but we continue to learn and innovate to make sure that we stay on top of it.
Great. Thank you so much, Zahir. Great answer. And I agree with you wholeheartedly that the post-COVID world is not going to look very much like the pre-COVID world. It's going to be a new normal, that's for sure. Now, I might, we were going to ask each of you to sort of give your one piece of advice for cracking the US market, but I'm just conscious of time. So I'm going to pass back to Stuart in case there are some questions that have come through while we've been speaking. Stuart.
Thanks very much, Steve. And thanks everyone for sharing your thoughts and comments so far. Quick note to the audience that we have here. If you do have any questions, feel free to put them in the chat box there. I haven't seen any come through just yet, but feel free to include those now. And in the meantime, I think I get to ask a question, which is lovely. Zahir, I'm going to jump over to you. Of course, we're here today to help Australian fintechs understand the US market for entry for their business. And I want to ask you about competition. So of course, when Afterpay were moving to the US, such a competitive market. Not only do you think about the US competitors like Affirm or Sezzle, and then the big card providers, Visa, MasterCard, Amex, PayPal, whoever else there is, but there are international players as well that we need to consider, like Klarna, so the Swedish giant that's going in. What would be your advice to an Australian company looking at the US? Because all of those other companies doing amazing things around the world are also looking at the US because of that size of the pie. And of course, so much competition in the BNPL space now. So I'd love to hear your thoughts on that. Thanks.
Yeah, I think first of all, competition is a great thing. If you look back 6-7 years ago when Afterpay started in Australia, to see where it has come today globally is fantastic. And to see all the competition that's come behind it has reiterated that what we entered the market to do, the problems that we went to solve, the consumer that we went to address, we were doing the right thing. And so I would say a couple of things. Stay focused and stay true to your mission. It is key that you do that, because that will, at the end of the day, that will drive you the customer success that you want, that will drive the customers to you. When you think about entering a market like the US, it can be very distracting because there's a lot of things happening. As you mentioned, there's multiple people that are playing in the same space or a similar space to you. It's easy to be tempted to change your direction all the time and water down what you actually came into the market to do or what you stand for. So I'd say stay focused, watch the competition, watch what's happening around you, but stay focused to what you're doing. Balance all of the opportunities, but grow responsibly. It's great to grow, but you've got to grow responsibly so that you can have an organization that's going to be around for a long time. And then the last piece I would say is have the confidence to go global, right? And you see Australia FinTech scene it's at an inflection point. In the past, Australians have been great adopters of new technology. Now it's so exciting to see that a lot of the new technology that is coming to the world is born in Australia and it's coming out of there. So don't be afraid to think globally, but stay focused to what you do. Stay focused on your mission. Don't get distracted by all of the shiny objects that might be around you. Sometimes others will do things to distract you, and it's okay to be focused, and it's okay to be responsible and grow a business that will be around for a long time. So both your consumers, your merchants, and any of the other stakeholders that are relying on you, that use your service, can use it. And then you can start to innovate on top of that.
Thanks, Sahir. That is great advice. And as you said, there's so much happening in the Australian tech space and fintech space at the moment. The big announcement of Tech Centre in Sydney this week, and all of the awesome companies doing amazing things around the world. One more from me, if that's all right. Everyone, I think, is leaving some space for me to ask questions, which is great. I just wanted to touch on as well that we are recording this session and it will be up on YouTube. So acting as a resource, you'll be able to hear all of the awesome comments everyone has shared. And especially Trina's top 5 tip for going to the US, which I think was really special. It was touched on today, but Simone, I'm going to throw this one over to you. Probably don't have to give too much of a long response, but any commentary on Square's new name, Block?
Way to put me on the spot, Stuart. I actually think it's pretty cool. I don't know if you've looked at the website. It's very different to anything that I've seen certainly Square do before. But you know, in the same week that Jack Dorsey resigns from as CEO of Twitter, really doubling down on their belief in the next wave of financial management, essentially bringing in that crypto element, bringing in the blockchain element, wrapping that into the current ecosystem that they've already got with Cash App and Square for their sellers. Super cool. And obviously there's the other things like Tidal in there as well. But I don't know, if you haven't been to their website, block.xyz, it's really interesting. And there's even a soundtrack from Jay-Z to keep you entertained while you're looking. So look, I think it's indicative of some big things to come.
Yeah, absolutely. Thanks for that, Simone. It is fascinating to see the way that organisation is going. Can't wait to see where we are in a few years as well. Jeremy, you've got a question I'm going to throw over to you if possible. And thanks, Brendan, for including this one. Jeremy, the question is, from a B2B lending perspective, which is the easiest state to enter? Not a simple question, but we'll see how you go with it.
Yeah. So you know, when you're in the B2B lending space, it's a much less regulated space. Obviously, consumer lending is where state licensing is a lot more required. So I don't know the number one state off the top of my head, but I can say whenever you're in B2B lending, I would say at least half of the states wouldn't require a license if you're just doing commercial lending. And then the other thing that states will look at is if the loan amount. So for instance, you know, if you have a minimum loan amount, let's say of $50,000 US dollars, then you would need a license in basically no state, maybe 3 or 4. Because they're concerned about low dollar lending. They think if you're borrowing that high amount of money, then you're a sophisticated borrower, that you don't need the protection of regulation. So B2B lending, I would say there are probably about half of the states that you wouldn't need a license. And then of the half where you would, it would depend on the loan amount that you're offering.
Thanks, Jeremy. And with that loan amount, is that per state, or is there a figure where it starts being looked at or stops being looked at? Say it's $10,000 or $50,000.
Yeah, that's what makes it so difficult. Is it's each state. There are some states, California is one, where any loan amount, it doesn't matter, you need to have a license. But that's an exception. That most of the states, it's state by state, and whatever the trigger is different.
Great, thank you very much. Well, that's an amazing session. Thank you so much, everyone. And I'm very, very appreciative of all your support. I'm just going to pass it back to Steve now to wrap up the session, but thank you from the FinTech Australia side.
Great. Thank you very much, Stuart. And thank you very much to FinTech Australia for organising today's webinar, and to our really fantastic panelists, Trina, Jeremy, Sahir, and Simone. They shared some really fantastic insights and advice to help all of us sort of understand this market a lot better and help you sort of navigate your journey to the US. As you continue your journey to the US market, Austrade's here to help. So we formally offer a number of programs to help Australian companies preparing for the US market. Now, Trina mentioned the landing pad program based in San Francisco. It's an intensive 90-day program focusing on supporting Australian scale-ups. And Simone mentioned the FinTech activation program that we ran with Numa, which is now known as Weave, as an accelerator here in New York, which is really trying to help a lot of Australian companies enter that market and build those networks. We also offer a suite of services to help companies, introductions to contacts and service providers, market information and preparation, and a number of other things as well. So if you want to know more, if we can help you with your US expansion, please go to our FinTech landing page, which is austrade.gov.au/FinTech export. And there you'll find some information to help you on that journey, but we'd be glad to help you in future. All right, so I think thank you very much to our fantastic panelists. Thank you for FinTech Australia, and thank you to all of our participants for joining the session today. Thank you.
Steve.
Thanks for having us.
Thanks,
Bye.
everyone.